Traders! Stop forcing trades in low volume markets and pay attention! Bitcoin is quiet again, but this time the charts are telling us a very compelling story. Price structure is not breaking any important levels. Momentum is not strongly bearish, and beneath the surface, strength is quietly proliferating. We've got a bullish signal on higher time frames, compression on the daily, and liquidity clearly sitting above price. Before we get into the charts though, you need to see what is happening on the macro and institutional side because it lines up perfectly with what price is doing right now. Let's go! First, conviction is continuing to speak louder than fear. Michael Saylor's strategy just bought another 1,229 Bitcoin for $108 million. That brings his 2025 Bitcoin purchases to over 225,000 Bitcoin. Fear is loud. Conviction is quiet. I love this clip of him on this roller coaster. Imagine if he could be interviewed in this moment. It would probably sound like this. Excuse me, Mr. Saylor, how do you feel about your new Bitcoin acquisition? Tengo cojones de acero. For those who don't speak Spanish, that translates into I have balls of steel. Does that satisfy your inquiry? Yes, thank you, Mr. Saylor. And this isn't isolated. Your best friend Larry Fink and his company just deposited 2,201 Bitcoin, nearly $200 million worth, Mr. Powers, and over 7,500 Ethereum into Coinbase Prime. That's not retail activity. That's institutional positioning during consolidation. And I think he had done something similar to this a few days earlier. This guy doesn't stop. Now zoom out even further. Cathie Wood's bull case for Bitcoin sits at 1.5 million by 2027. Now here's the thing. Well, that's great. She's been saying this. She said this a month ago. She said this a few days ago. And well, that's good information. It's good if you're an investor and if you're in the position. But don't let something like this prompt you into taking a position or give you a false sense of confidence. It is very important that you do your own homework and assess your own risk. And you use evidence-based information like you can find on a chart, like the charts that we have on this channel. So make sure that you're not swayed by propaganda like this because this is only for her benefit, not yours. So the point is this. Institutions are still accumulating. Capital is still moving into Bitcoin and Ethereum, and long-term theses are being built during periods of compression. That is not selling behavior. That's positioning ahead of the next phase. Now, let's see how all of this lines up with the charts. Let's start with the weekly Bitcoin chart because this is where the most important information is on the board. As you can see here, Bitcoin is printing a clear bullish signal on the weekly time frame. That tells us bearish momentum is weakening. Check this out. The RSI, it's in an oversold position while price is producing a higher low. When you have this type of combination, it usually means there's a greater probability of a bullish reversal, even though price has not yet shown any expansion. Historically, weekly signals of this type appear near the beginning of the next momentum reversal, not at the start of bear markets. This is a structural signal, not noise. Let's zoom out to the monthly chart. As you can see right here, Bitcoin is sitting right on its long-term trend line, and this is the third touch, roughly around the 58% retracement. That matters. Third touches on long-term trend lines are often where trends either reset strongly or fail decisively. That makes this a high probability decision zone, not a random level. On the daily time frame, Bitcoin is clearly consolidating. You can see right here. No impulsive selling, no break of major supports. And above current price, there is clear buy-side liquidity waiting. It's just sitting up there. Markets are drawn to liquidity. As long as price holds this range, that buy-side liquidity remains the magnet. What's very obvious on this time frame as well is the consolidation, which you will see on smaller time frames. But a key point here is this is holiday volume. Even though there's a bearish pin bar that is present here, this does not carry much weight because the market is not in a trend on the smaller time frames. So what you want to watch for is this illustration right here, this potential scenario coming in the next few weeks. The key is the confirmation. I'm going to repeat that a lot. As long as price maintains the support, If it confirms, then look for the bullish reversal. If it breaks with conviction, then we have a new piece of information and we adjust. But remember, the broader structure favors a bullish reversal. So the scenario to watch for is what you see here on this chart. On the 4-hour, price is clearly rotating between defined zones. This is controlled price action. There's no significant weakness, no acceleration lower, just balance. That usually comes before expansion, not after. When it comes to consolidation such as this, you want to pay the closest attention to when price touches a range low or if price touches a range high, like it was doing yesterday. That is where your high probability reversals are likely to occur, not at the midpoint. The midpoint is where price is most random because this is not a trend. It's a range. So keep that in mind, especially in a low volume environment. On the 2-hour, Bitcoin continues to respect the trend line. You can see that right here. Below price, structure is maintaining stability. Above price, we have buy-side liquidity and a supply zone further up. That gives us a very clean roadmap. Compression, liquidity grab, reaction at supply. This is repeatable technical behavior. Also, I want to point out, in yesterday's video, I specifically talked about this area and said risk was very high of a bearish reversal because follow-through is less likely in holiday types of environments where volume is low. Remember, context plays a very important role in this game. Context is king. Always keep that in mind, especially when you have these swift reactive moves like we saw in Bitcoin. Now, let's take a look at Ethereum on the weekly. So on this time frame, as you can see here, Ethereum is forming a clear chart pattern. At the same time, there's strong weekly support sitting below. That creates a very defined environment. Bearish risk is defined clearly in this situation. Structure is still intact. Any breakout becomes meaningful. Ethereum is coiling, not failing. Now, on the daily, Ethereum is still respecting its trend line, as you can see right here. There is no structural compromise. And just like Bitcoin, there's buy-side liquidity sitting above price. You can see that right here. Just a quick note, yesterday we saw this full candle and it looked like a breakout was in progress. But again, you can't overreact to what you see. You have to understand the context of the environment. And this environment is a holiday environment, which implies it is low volume. So you want to wait for more probable areas like this trend line. And then when volume returns, you want to be anticipating this type of scenario toward the liquidity. This is all about confirmations, people. So when you put everything together, Bitcoin, weekly bullish reversal formation in effect, monthly trendline support on the third touch, daily consolidation with buy-side liquidity above, 4-hour rotation between zones, 2-hour trendline respect with liquidity and supply map. Ethereum, daily trendline still respected, buy-side liquidity above, weekly pattern forming with support below. And on the macro side, strategy, continuing aggressive accumulation. Larry Fink still positioning in Bitcoin and Ethereum. Long-term institutional bull cases strengthening. This isn't random price action. This is compression at high time frame support while institutions stay active. If you want to trade these levels yourself, I left my exchange links in the description. BTCC and WEX. Use them only if they help. They support the channel and give you access to the same tools. And Michael, you have something to add?
Yes, don't forget to like, subscribe, and leave a comment. It's not like I care, but I believe it helps out the channel.
Oh, thanks, Michael.
You bet.
Markets don't reward impatience. They compress first, they frustrate second, and then they move. Right now, momentum is improving, structure is intact, and liquidity is clearly defined. Stay patient, respect the levels, and I'll see you in the next one.